Welcome to Pro News Weekly. Let's dive into the weekly updates on the financial markets. The dollar index has climbed 4.5% over the past 4 weeks, a movement that's not unusual compared to longer and sharper rallies in recent years. However, what stands out is that equities and gold are also on the rise alongside it. It's probably more accurate to talk about a decline in competitors rather than a strengthening of the dollar. The drop in U.S. bond prices, reflected in rising yields, supports the hypothesis and rejects the idea of a craving for defensive assets. By the end of the week, this craving had abated somewhat, leading to a fall in risky assets and a correction in the dollar. Traders are de-risking and consolidating ahead of a series of important market events in early November. There are 3 potential technical targets for the USD pullback from the current level of 104. The first is the 200-day moving average at 103.8. The second is the intermediate Fibonacci retracement level of 76.8% of the advance at 103.33. The third is the classic 61.8% retracement to 102.7. The trio of major U.S. indices, the S&P 500, Nasdaq 100, and Dow Jones, lost ground after 6 weeks of gains. The first two found a base for growth in the second half of the week on the back of strong reports from technology companies. Meanwhile, the Dow Jones was methodically sold off after bottoming out at the end of last month. This could be either short-term risk-taking ahead of important events or the start of a deeper decline. We are wary of the Fear and Greed Index breaking out of the 70 to 75 range, where it has been since late September. The last time this happened was in April, when the S&P 500 lost over 6.5% from its peak before bottoming out. The VIX Volatility Index is at historically high levels, hovering around 20, which is usually characteristic of equity market downturns. However, a few big stories are pulling the whole market back up. Last week was the busiest of the quarterly reporting season, and there was no shortage of interesting stories. One major positive was Tesla's share price, which jumped more than 20% on optimistic forecasts for next year, and the promise of a low-cost electric car. It was the biggest one-day rise in 11 years, and took the share price close to the highs of the past 12 months. But even now, the price remains 35% below its peak from nearly 3 years ago. McDonald's doesn't report until the new week, but it was in the news twice last week. First, Donald Trump used it in his presidential campaign, and the next day, an E. coli outbreak at several restaurants sent the stock down 7%. Military contractors fell. The report triggered profit-taking in Lockheed Martin shares, which fell 9% from all-time highs. Boeing reported that it continued to burn cash and failed to reach a deal with striking workers. Its shares lost 7%, but that's a swing of 65% below the 2019 all-time high. Gold continued to hit all-time highs in the first half of the week, peaking at $2,758 per troy ounce in the spot market. However, the price retreated by $50 on the same day and remained off the peak as caution grew towards the end of the week. We wouldn't be surprised to see a pullback to the $2,670 to $2,700 range in the upcoming week. This won't break the strong bullish trend, but a decisive break below will make us cautious in anticipation of a deeper pullback. Bitcoin began the week with an attempted assault on the $70,000 mark. An influx of sellers pushed the price back more than $4,000 early on Wednesday, followed by a recovery to $67,500. The entire crypto market followed Bitcoin's lead, losing 4% from its peak at the start of the week to $2.3 trillion. Speculation is growing among crypto traders about the impact of a future U.S. administration on cryptocurrency regulation. While it's generally believed that Republicans are more favorable toward crypto, this was not necessarily the case between 2017 and 2021. Seasonal patterns in the VIX, often referred to as the market's fear gauge, indicate that volatility during this election year is likely to peak in the coming weeks, so be prepared for moves against established trends. Looking ahead, consumer inflation data from Australia and Germany will be released on Wednesday. Initial estimates of third-quarter GDP for the Eurozone and the US are also significant, as they could greatly influence the central bank's views on interest rates. The Bank of Japan will decide on interest rates on Thursday. Expectations have shifted towards no change in recent days, putting pressure on the yen. However, the promise of further rate hikes could revive interest in the Japanese currency. Friday will be the highlight of the week for the US markets, thanks to the October non-farm payrolls report. Throughout the week, the markets and we will be monitoring indirect indicators to assess the situation early. Stay tuned to Pro News Weekly for more updates on global markets. Like, share, and subscribe.